Prenesti. We good? All right, ladies and gentlemen. Wait, this is what live's all about. Thank you, Lisa. All right, we are live here with Mike Prenesti from Prosperity Mortgage. Hello, Mike. What's going on, man? Tell me a little about yourself, how long you've been doing this, all that good stuff.
Thanks for having me.
Raiders fan.
Appreciate it. Yeah, we were just having, this is a whole, we won't even go there.
Right.
So, I've been in the business for, let's see, about 13 years now. Just came back over to Prosperity about 3 weeks ago. So
Nice.
yeah.
All right, welcome back.
Yeah, thank you. Appreciate that.
Working with John and the whole crew.
Yeah, back with John, back at Sahara Southwest.
Eddie, the whole crew. It's
Eddie,
great.
yeah, yeah. So,
Some crafty veterans.
yeah, those guys, they don't miss a beat.
They don't.
It's
I
like
love it.
It's like I never left.
Well, when I saw your success stories a couple weeks ago,
Yeah.
I just assumed, and I was like, oh great, you are back.
Yeah, you're like a deer in the headlights.
I was like,
You're like, oh, are you supposed to be in here? I'm like, Rick, I'm back with Prosperity.
I love it. I love it. And you have a smoking new hairdo, which is really good. Tight is right. That's what you're saying.
I shaved it a little tight just for you because I knew I had to compete with yours. So.
And last week I shaved mine a little too tight right here. Actually, no, I hit my head on the golf cart thing.
You hit
I
your head on the
didn't have
golf
my
cart?
sunglasses
Too
up
much
here.
tequila?
No, I took tequila. Gave that up a long time ago. And the world's a safer place.
There you go. Sounds the golf course.
All right, so tell us. I mean, I know you. Okay, so you're back with Prosperity, and
Yeah.
Prosperity's got a lot of great stuff going on. So tell us a little bit about what they do.
So Prosperity has a lot of great stuff. Competitive interest rates, loan programs. They do specials. You know, right now we're doing the appraisal special where we're refunding back appraisals. We've got the program where we're not charging any lender fees for nurses, EMTs, doctors, police officers, stuff like that. So they're always bringing stuff out, you know, for the agents clients, just trying to help them out in this crazy market. And,
Yeah.
Everybody's so interest rate conscious. You know, we're right there with the best of them. So
Right.
it's fantastic. It's a breath of fresh air.
And Prosperity is, just so everybody understands, Prosperity is also owned by the parent company, Home Services, just like Berkshire Hathaway as well. So we're all on the same roof, which is great.
Yeah.
So we give you that total service. Equity is also involved in that too, which is nice, right? So you get the one-stop shop, which is great. We go over and above, which is what, to me, for the consumer, that's the best thing, because like you said, they save money and they're well taken care of.
Yeah, I would say, we're probably the most accountable mortgage company that's ever been associated with Berkshire Hathaway, because we have that vested interest because we're all underneath that same umbrella, so we're all interested in making everybody successful.
I love it.
Yeah.
And I feel it necessary to mention that Mike also has his own shirt, which is a fine mix of Star Wars and Area 51 all mixed into one.
That is not Area 51. That is the Rebel Alliance logo that is made into a house.
I love it. It's cool.
And yeah, it says, "May the rate be with you" underneath it.
May the rate be with you. I love it. You guys are also doing 2-to-1 buy-downs too, aren't you?
Yeah, we do those as well. We kind of backed off a little bit on those, just because if people have the money to get that permanent buy down, that's probably the best way to go.
Right. And then you also are doing, what is it, till the end of 2025? They get today's rate. They streamline refi without any fee from
Correct.
Right. Tell them what that is, because I just say it fast.
So basically, if you close a loan with us today, and we come back, before 2025, and we refinance it, there's going to be no lender fees.
Which is great.
Yeah, it's
So-
fantastic. It's a great selling point.
And I think a lot of people need to understand, and I know that a lot of agents know this, but I'm not sure a lot of consumers know this, that today, even Dave Ramsey says this. Okay, if Dave Ramsey and me are on the same page, I guess it's a good day.
Yeah.
Buy the house. Okay, if you ever heard his accent, you know what I mean. He, we've never had a situation, I've been doing this 38 years, I've never been in a situation where inventory, meaning homes available, have been as tight as it is. So even though the rates are higher, the opportunity for buyers, and even sellers, because if you list your home at the right price today, it's going, right? But even buyers today, if you don't own your own piece of the world, okay, it's a time to do it because, when the rates go down, it's only going to become more competitive. And I think
I did a video on this last week.
you did, yeah. Tell us about that.
So basically, BlackRock came out and said that that for every 1% lower in interest rate, 3 to 5 million more buyers are going to qualify for a home at $400,000. I mean, think about that. Think about what's going to happen, especially in this market with, let's just say 20,000 more buyers just in our market. Or maybe, yeah, that's a little exaggerated, but it just the competition that is going to happen, you're going to wind up paying more for the house.
Right, and you're going to be up against 7 offers. And
you're right, and the difference is you're going to pay more for the house out of pocket.
Right.
Because you're going to have to pay above appraised value. So now you're paying out of pocket. Yeah. As opposed to, getting the deal now, you're able to do a standard loan with your standard down payment, etc.
Right.
So.
Well, and I don't know if your numbers. I don't know if your number's too far crazy, because as far as the number of people buying here, because I just read something before we came in here, and if the numbers continue the way they are, Vegas will be the #1 destination of new buyers market. It's very possible by the end of this year.
Well,
which is crazy.
So not to veer off in a different direction, California is going to hell in a handbag, right? So people are still leaving California in droves. Right. So that in itself is going to bring more people here, and then just the way that with all of the sports and everything else coming here, people, it's going to be a hot destination. So, right. Like you said earlier, if you can get in a piece of real estate now, get in somewhere now, it's the best option to do.
Right. Right, and I think we'll have a baseball team. Well, they already said the A's.
Yeah,
they're one more step, right? One more step.
Yeah,
that's cool.
All about the money there, right?
Yeah, it's always all about the money. Yeah. Right, and then maybe we'll just take the Golden State Warriors while we're at it, right? Because we took the Raiders.
Yeah.
I'm only kidding, I'm only kidding.
I don't think so. They just built a new stadium for those guys.
Yeah, now they're more like the San Francisco. I mean, they're
because it's next to
it's
next to the Giant Stadium.
Yeah.
Right?
Yeah, it really is. It's a beautiful spot. And you know what? I agree with you. There's a lot of people leaving California, but the one thing California always has going for it is there's a lot of people always moving into it.
Yeah.
There's never been, although
it's a beautiful state.
It's a beautiful state. Yeah. They're just a little crazy with some of the stuff they do, but as far as location, it's tough to beat.
Yeah.
All right. So in today's market, give us some. What do you see happening? I mean, a lot of people are talking about the rates, and I guess you don't have a crystal ball, but.
So I don't, but what we know is it's turning into a more kind of a stabilized environment. Pre 15 years ago, so interest rates are right now, they're at like a 52-year average. So we're right where we're supposed to be, over the last 50 years or so. So, and I think that the market, people are starting to understand and starting to realize that this is a more normal market. We may not, and like you said, I don't have a crystal ball. We may not see those 3 or 4% interest rates again, because when we look at interest rates, we look at inflation. Inflation has gone down a little bit. So we're hoping that we get that little bit of a dip in interest rates. But I personally don't see this big crash happening. I don't see the home prices just crashing and the 2007 market just getting washed in. So I think that we're in a more normalized type of environment. Rates 7.25 conventional. You're going to get lower than that on the Govy loans. But once everybody starts understanding it's a more normal environment, I think more people are going to come into the market.
Right.
And so, I mean, I just doing a deal, just working with an agent, doing a deal now. He's multiple offers. I mean, this is where we are.
We are because of the lack of inventory.
Right back. Yeah. Yeah.
2007. People have to understand. In 2007, there were Let's even go a little further. Let's say 2009. Okay, there were 30,000 homes on the market in Las Vegas. Yeah. There's like a lot. There's like 4 or 5.
Yeah.
So that inventory overture, and you mentioned 15 years, we've only built 25% as many homes across the country in any other 15-year period in the history of real estate in this country. So that whole thing about the crash, the question is how fast is it going to go up, simply from a supply and demand issue.
Right.
And if the rates come down and all these people come off the sidelines, it'll be a feeding frenzy again. So
all of the move up and move down buyers are all on the sidelines right now.
Yeah.
Because they all got those 3-4% interest rates. So they're all just waiting.
right,
So, even if we get down, to the 5.5 mark, that's not going to be so much of a sticker shock to them. So they're going to all come back into the market.
right,
This is a perfect time for first-time home buyers because they're not jaded.
right.
They're not jaded by rate. So, I know some, when we tell them the payments, they're like, but once again, just the education part, if we educate them, hey, listen, get in now, get in early, and then,
Right.
refinance later on down the road should the crash happen,
Right.
so.
Well, plus, rents aren't going down.
Oh, no.
Rent's 100% interest. At least when you're paying a mortgage, you have tax benefits and principal reduction. You don't have that with renting.
Yeah.
You're in control. Your payment stays the same, or when you refinance, it'll go down. So there's no, I love people, well, the rates are high, so you can continue to penalize yourself and rent.
But the rates are high compared to what?
Yeah, exactly.
You know what I'm
compared
saying?
to 2 years ago.
Okay, great.
Yeah.
So,
I hear you, but that was fantasy land.
right.
That's why I refinanced.
Yeah, they were
I feel right.
artificially, they were kept down artificially, so,
People would ask me back then, I don't know what you would say, when they said, what's the rates? Free. That's what I would say. 2.75 is free. Historically?
I still have clients that call me up and they're like, man, I should have refinanced when you quoted me 3.5. I was waiting for 3. I'm like, oh, yeah.
You'll be waiting a long time now. Maybe never. They'll probably get in the 4s. Well, we get an election year coming next year. So you're thinking, okay, maybe the Fed, maybe the government, maybe they want to look good to get reelected, lower the base rate. Who knows?
Yeah.
I was thinking that, but I would have thought they would have started by now. So I don't know. But I do know it's an election year, so things can happen. I was going to say regime change. We could change administrations. Whoa.
Change the regime.
Right, regime change.
It's a different conversation.
Exactly. And then who knows what will happen after that. All right, because there's a reason 2016, 2020 where the rates were lower. There's a lot of factors. And there's a lot of factors why they're at 7.25 now.
Yeah.
So you never know what's going to happen as far as that goes.
Yeah.
But I will say this, that historically the rates are still good, and don't penalize yourself. Jump in, the water's fine. You're always better off owning. And if you really want to own your own property, or even if I was downsizing or side sizing or upsizing, I would still go now because I can secure the property I want now. My house is, if you own a house in Vegas for the last 10 years, it's gone up 250%. Do you need more than that to sell? And then the property you're going to buy, okay, you're going to have to pay a little bit more on the interest rate if you have a mortgage, but you can refinance, let's say, with you guys for up to 2 years, over 2 years now.
Right.
For no lender fee.
But I think it's important for us as professionals in this industry to get away from the rates are bad conversation.
I
know I hear you talking about it all the
Yeah.
time, and I try to talk about it all the time. The rates are bad compared to what? Like, we were spoiled.
We were so
spoiled. And I think that we should get back to the educational piece of owning a piece of real estate. Just, there's so much more benefits to it. The move up, move down. Had a conversation with a guy yesterday. He's like, this house is just too small for me and my family. He's got a 4.5% interest rate. So I'm talking to him. He wants to move up. But I'm talking to him and I'm like, well, what's important to you? Is it important to you to get out of the small house, have some more room for the kids and the family? Yes, all the way down the road. So I think we need to get back to just helping people.
Yeah.
Helping people understand that for first-time home buyers, owning a piece of real estate it's peace of mind. It's going to better your life quality. All of those good things.
Yeah.
Right. That's what we need to get back to as professionals.
Like when I started the business 38 years ago, it was owning your own piece of the American dream.
Yeah.
We very rarely talk about that anymore. We should.
Yeah, right.
Especially in Las Vegas, where, look at California, right? Inventory is so tight there, the prices are really off the charts.
Yeah.
But Phoenix and Las Vegas, we've had some serious growth, but it's starting to slow down. I mean, like Phoenix, only so much water. Las Vegas is now talking about that. Right. If they start limiting building permits, think of what that will do to to values too.
I mean, so, you know, it's never been, it's, I'm not going to say that it's super difficult to own a home, but it's a goal. It's something that you have to plan for. It's not, you can't just wake up one morning and go, oh, I'm just going to go buy a house, you know, and because everybody's doing it type deal. You know, it's planning. You know, you got to have money in the bank. You got good credit. You've got to have your stable job and stuff like that. So that's where the American dream comes into. Right. Because you're not just going down to the local, you know, oh, I'm just going to go get a new bike. Okay, you'll go get a new bike. You know, so you got to plan for it. And so, but I can tell you now, and you know, the reward of buying that house and getting the keys is so much nice when you move your family in or whatever. It's a huge accomplishment. So that's what we should be talking about.
I agree 100%. I agree 100%. Okay, awesome. Mike, any final words you want to leave these lovely people out in Facebook land?
Listen, if you're not working with Prosperity, you know, we would love the opportunity to help you build your business and help you grow. You know, we're part of the Berkshire Hathaway family now, and we have a vested interest. And like I said before, we're the most accountable mortgage company that you're ever going to come across. So there's a bunch of us here. We all have a lot of experience. We know how to talk to your clients. We know how to get them pre-qualified and pre-approved. And, you know, for the American dream. So
the American dream, baby.
Give us a shot. We'd love to help out.
All right. Awesome, Mike. Awesome. Thanks for your time. Appreciate it, man.
Thank you, man. Appreciate you.
All right, everybody. See you soon.